Hey, good morning. Welcome to your mortgage rate forecast with Scott Criss. Your mortgage rates and news. It's April 6th. Let's get started with the charts. We're currently trading at 102.50 this morning. Actually exceeded my expectations from last week. You can see here late last week we actually broke out of the trading range, capped at about 102.40, and we're trading pretty well. So 102.40 has really become our next support, technically 102.38. So anyway, we're projecting new resistance coming up above us at about 102.80 here, and so and we're using data back from January and even a couple times in February. So bonds are looking pretty good, but keep in mind, investors, as they're trading, they want to buy low and sell high. So as the bonds start to approach this 102.80, there's going to be some investors that are going to be hopping off the bandwagon. Now, bonds are a little bit down today, only because of jobless claims. There really wasn't much news out. So it was just jobless claims. They came in better than expected. That wasn't too helpful for bonds, but they're holding their ground. So to kind of quantify where we're at, Freddie Mac just released their update for March. They said the average consumer paid a 4.2 rate at half of a point. You can go down here to see the details. And if we take a look at where bonds traded in March, they traded on average right about 101.90. So if we're at 102.50 this morning, that's about 60 cents better. So if the average consumer paid half of a point for that rate back in March, if we're at 60 cents better, they might get a small credit, maybe a 0.1 credit. So interest rates have definitely improved since March averages. So that's good news for you guys as a consumer. Anyway, let's get to our projections. Here's where we're at. Even though we're in an upward trading channel, technically, all the analysts are pretty neutral. They don't know if we're gonna continue this trading channel. We are at the top end of the trading range. This is when investors do kind of like just take their chips off the table and take their gains and run. So I would say if you're floating right now, you're just gonna want to be kind of careful. I know I always say that, if you're floating, be careful, but it's true. But I think our swing is only maybe 10 basis points to the better, 30 basis points to the worse. So if the analysts are accurate, and I got to say, I'm gonna jump off the bandwagon and onto the bandwagon with the analysts and say, you know what, I think the investors are going to take their gains and run. I would say let's just be careful until we can develop a stronger floor. I think we're going to trade between 102.20 and 102.60 through next Thursday. So hopefully they're better than that, but that's my projections, guys. So that's it for now. You know what? We would love to hear from you. Hit that thumbs up. You know what to do. Leave your comments down below if you have questions or if you have your own projections. We'd love to hear from you guys and get some comments down there. And if it's your first time on the channel, at the top left, that ugly guy, you can click on him. That will get you just a quick alert when we release new updates. We try to come out every Thursday with the market analysis. And if none of this made sense to you and you're like, I'm just trying to get a mortgage, like what do these mortgage securities, these bonds have to do with me getting a mortgage? How do they really impact me? At the top right, click on Mortgage Bonds 101. That link will show you all the basics that you need to know as a consumer when getting a mortgage and when to lock in your rate. Anyway, that's it for now, guys. Hope you have a great day. We'll talk to you soon. Bye-bye.